Hello, everybody. The Dow Jones is down over 1,000 points today in one day. The Nasdaq's down almost 4% in one day. What is going on? Are the bears back? We into a recession? A depression? Find out in this video. Here we go for this market update for Monday, August 29th, 2022. Let's go. Hello, everybody. It's Jeremy Whaley here from Trade Maestro. Hope you're doing fantastic. Hope you've had a great week and great weekend as we're getting into the weekend here. And I hope you're ready to take on the next week of trading. So I'm recording this at the end of the day on Friday. I'm trying to push this out a little bit earlier this weekend than Sunday night, just because there was so much that happened today on Friday in the market. The next trading day, of course, will be Monday, the 29th. So that's why this is a Monday, August 29th market update. Yeah, lots going on. Jerome Powell spoke today in Jackson Hole, and finally, people are maybe realizing that the end of the world is here. Okay, maybe it's not the end of the world. It's probably not the end of the world, but stock market's not done. I've been saying this all summer. We had several weeks here in a row where things kept going higher and higher, and it was like kind of frustrating. And now I think the bears are back. I did an update on Wednesday. Sorry, I didn't mean to make that shift yet. I did an update on Wednesday, and we talked about the market moving lower there and where we were heading from there. And then, here we are today, 1,000 points down. So let's get over here and take a look at what is going on. Let me move that off that screen there so I can see better. And first thing I want to do is get rid of all these lines, because if you haven't gone through the drawing process with me, sometimes they can be overwhelming. And I just want to draw your attention to today's candlestick. Last market update I did was right there after that red candle. And then Wednesday, we had kind of a little spinning top, and then a green one on Thursday. It was up about 300 points yesterday. And then Friday, today, we have this big bearish candle, 1,008 to the downside, 1,008. Whee! Here we go. Now, it's not a surprise. Like I say, we've been talking about it. We've been anticipating this. And a couple things I want to make sure I hit on in this update is the candlestick pattern, and then we'll talk about a couple of other things as well. But first thing I want to talk about here is, number one, if you don't watch the rest of the video, market's going down, so hang on. All right, there you go. For those of you who are watching the rest of the video, I want to draw your attention to these selling points right here. They're starting to line up and create a bit of a trend line. I didn't draw that very, very straight. I want to undo my lines now so you can see them all. I'm going to turn them back on. And you can see my blue trend line that was running through here. This is part of what threw us off a little bit, because we'd lined this thing up very well, and we just kept going. We just kept going here for about the last week or so, and we extended up to another pivot area. You see the purple line in here. It is a pivot area. This is where the market can turn. It's a known turning location, but we just didn't think it was going to go that far. So really nothing has changed in the downtrend. It's just that we were a little bit surprised at how high the bounce went. But when you look at these turning points, there's one, there's two lower high, three lower high. This bear trend is continuing. This is a continuation pattern right here. And it was a deep bounce. It was a deep, deep bounce, and I know that it's almost like an oxymoron, deep, meaning it went a lot further than we thought. Normally it wouldn't have bounced that far in a bear trend. And so the fact that it bounced this far really tells you how much counter move we've got the opportunity for. The indicators were already telling us that for basically the last month. We've been overbought on this thing, ready for it to roll over. And then the one that really got me today, well, it didn't get me, but one that's really clarifying. That's better terminology. Again, I'm going to get rid of these lines because I need to get as few on here as we can just so you can see it really clearly. This candlestick formation is huge. This one right here. That is a 5-day candle pattern, and I'm gonna try to remember to come back, because I'm going to publish this before I publish the next video that I'm about to reference here. But I'm going to do a video on bearish candlestick formations, and this is one of them. Okay, so I'll have to remember. And if I don't, then somebody send me an email and remind me to link it up. But I'll try to remember to get that. When I get that one done, I'll link it in the description here below. That is a bearish candlestick formation called a falling three. So let me just kind of do some stuff here. There's the pattern right there. This is called a falling 3 candle pattern. It is a very, very bearish candle formation. And in this location, with this formation, the way that it is, it's extremely bearish. This market is, look, there's no guarantees in the market, but if there were a guarantee, this is a guarantee to be going down. This is a falling 3 candle pattern. It's a bearish continuation pattern, and it's about as bearish as we can get in this context. So the fact we're down 1,000 points today, that was big. The fact that it happened the way that it is here, bigger. The fact that it's part of a bearish trend that's already been established, we've bounced up, we've hit some resistance, and we've rolled over, even bigger. This is a huge signal that we're seeing right now. In case you're not familiar with what a falling 3 is, it is a bearish candle formation that has a big bearish candle, such as that right there. That's day number 1, okay? And then you have, this is where the 3 comes from, you have 3 smaller candles or spinning tops of some sort. They can be, they don't have, the color doesn't matter. It's irrelevant what color they are. They can be, in traditional candles, we call them black or white, solid or hollow, doesn't matter. In this context, you know, we're doing green and red because that's what we're doing here. And then you have a bearish candle that continues to the downside. So that's your traditional falling 3 formation. Looks like that right there. And you can see that's exactly what we've got over here. So it's day 1, 2, 3, 4, 5. It's a 5 candle pattern, and the 3 in the middle are the counter move. That's where the name falling 3 comes from. It's falling because the pattern is rolling over, or it's continuing in a bearish direction. It's falling. Get it? It's a falling pattern. But the 3 are the 3 counter move days that are in the middle. That's what you see on this chart over here. So I'm going to, maybe I'll change my pen color here. That's probably the easiest way to do it. So these 3 candles that you see in the middle, that's what qualified this as a falling 3. So you had a big bearish candle on day 1, the 3 candles in the middle, and then on day 5, which was today, you had that big bearish candle. That is an excellent continuation pattern, suggesting that the market is continuing to the downside, and in fact, it is continuing to the downside. Now, before I, before I go too far, let me just highlight. So there's the falling 3 pattern. This happened on all 3 of the major indices today. Here's the S&P 500. You see that? Boom, exactly there. And by the way, the criteria for a falling 3 is that you have a bearish candle. Okay, so there's your bearish candle, solid candle. Okay, you have 3 smaller candles of some sort that do not exceed, here's the criteria. It does not exceed the high of the first candle. Okay, so it can't go higher than the high of the first candle. And usually, not always, but usually it stays within the bottom range as well. It doesn't have to, but it usually does, okay? So that's the criteria right there. A large bearish candle, 3 smaller candles that do not exceed the high, and then it continues on that 5th day with a bearish candle. Again, the colors only matter for the day number 1 and day number 5. That would need to be a bearish candle, so in this case, a red candle. In traditional candlesticks, we'd be looking at black candles there, or solid candles. So that's the formation right there. You're seeing it. It meets that criteria. It does not trade above the high from day number 1. Boom. For the most part, it stayed within the entire candle range right there. You see that? Okay, so there's the criteria again. Coming over and looking at the Nasdaq really fast. Boom, there it is again. Now, we did trade above the high on Thursday. We traded above the high from Monday, but there was a huge gap. So if you included the gap as part of the trading day, which we don't necessarily right here, but if you did, we did not trade above that. So you still kind of meet that criteria. There's another discipline in candlestick trading called merging candles. And this, if we were to merge those candles into one large bearish candle, it's basically split over 2 sessions. Then you see the falling 3. So it's definitely there. The sentiment is there. And it's happening on all 3 of the indices. No questions about it. Nasdaq, here it is on the Nasdaq. I'll come back to the S&P because I moved on accidentally. Here's the Nasdaq. You can see the bearish trend now continuing. We've got 1 from November last year, 2, 3, now 4 lower highs, lower lows and lower highs. What does that mean, folks? It means it's a bearish trend. This is, I believe that we're getting into what's going to be a brutal September. So you're going to see a lot more of these updates because I really try to stay on it during these bear markets. There's the trend line though, folks. I showed this on Wednesday's update. This trend line, it did not really get exceeded where the Dow, the one on the Dow did, but this one here on the Nasdaq did not. We're right at that pivot area. It's a perfectly logical spot for the bear market to rally to and then continue. We are on our way down. 10,000 minimum is my minimum downside target for this wave for the Nasdaq. I expect we'll be moving at least to 10,000 on the Nasdaq. Ultimately lower than that, but for the short term here, 10,000 will be our next target. That's 20% roughly. Okay, on the Dow, I didn't give you that number, but on the Dow, which you're looking at here, 30,000 for sure. I believe we'll be closer to the 29,000 mark. Ultimately, before this thing's done, I'm still calling for 18,000 on the downside, but on the way down, 30,000 and then this 29,000, I think that's probably where we will. I think we'll hit those numbers this September. I really do. And maybe getting all the way down here to 26,500. That's going to be brutal. People are going to be freaking out. And, that's just, it is what it is. And then coming back to the S&P 500, here's the look on the S&P. And in a similar way, you can see that the trend line on this one also is exactly where our turning points were. So, yes, it is true. The Dow Jones far exceeded the trend line, far exceeded being, 1,000 points or so. It went above the trend line. But on these other two indices, that trend line is very much in play. And what's interesting about it, I think I said this on Wednesday as well, and I'll just kind of reemphasize it again. Coming back to the Dow, what's interesting is this was an outlier to the upside. We also had a similar size outlier to the downside back in June for that trend line. So it's kind of interesting. I don't think it has any real bearing on the forecasting for this, but it is just kind of interesting. All right, let's come back to the S&P. Let's talk about that falling three for a minute. I talk about 2008 often. I talk about it for many reasons, but lately I've been talking about it because it's been a model for how the market is falling. And I just want to show you what happened. This is the falling three pattern that you see in August of 2022. That's the one that we just completed this week, right? That's the falling three. Now, we're going to jump in the time machine, and it's going to take me a minute to get there because we're going to go back like 14 years here. We're going to go all the way back to 2008. So just hang with me while we resize this thing and rescale and scoot our little way back in history. And as I come back to 2008, I can't help but remember how I felt in 2008 because I had just started teaching people how to trade the stock market. And during that time, what we were doing is it was actually summer of 2008, so it's almost parallel exactly to where we are right now. And I was still a little bit nervous about teaching people because I hadn't really been doing it a whole lot yet. That was my first real class. I had literally eight people that were taking that class, and they were all friends and family except for two who were friends of friends and family. So anyway, so during that time, we had been doing market analysis, and the market, if you look at this, up until then had not been extremely bearish at that time. Okay, in fact, if you look at 2008, this is the S&P 500 in 2008. Got to find the exact place that this occurred. I'm going to find it here as I work through it. But notice what we had been dealing with before. This was essentially the same thing that we're dealing with right now. We had a market peak. We had a downward channel. See that? Very similar to what we're looking at right now. And it's been going on for several months. It's been going on since October of 2007. Okay? And we were pushing into the summer months. We were in July and August. And at this point in 2008, nobody was screaming recession, recession. Nobody was screaming financial crisis. Housing prices were through the roof. People were refinancing at ridiculous rates. I mean, all sorts of crazy stuff was happening. And the market was crashing and nobody seemed to recognize it. And I just want to draw your attention in here. Every time the market would kind of bounce, everybody get all excited about it. And we had that right there. Okay, so I have been predicting all along the way, or I should say I've been connecting these two time periods, and I'm going to tell you right now, we are here. We are here, okay? Now, this was 2008, but if you use the parallel, if you lay it over what we're doing right now, that's where we are. And I'm going to zoom in on this so you can see it. Go full screen here. Zoom in on this. Look where my arrow is. You see that arrow? Look at that pattern. What does that look exactly like? It's a falling 3. See that? Big bearish candle, 3 smaller candles, bearish continuation. That's exactly what we just had happen today. It's exactly what happened. Okay? Now, the big difference is this rally was not as big as the one we've just been through. The one we just went through looked a lot more like the one that we had in March of 2008, okay? But that's okay. It doesn't rally, these things, we're looking at the model, we're looking at the general structure, not looking necessarily at the identical structure, okay? That falling 3, this is still, people didn't believe it. People weren't quite there yet, but look at what happened. There's something big happened here. We dropped through 1,220 on the S&P. That was the support. And when we did that, watch what happened. Boom, there we go. There you go. And that was when people actually realized, oh, crud muffin. They probably didn't say crud muffin. But this was the oh, shooky dookie lookie moment when people were like, we are in a crisis. Okay? I believe that we're moving into that phase right now. And I've been predicting that since last November. In looking at this, we dropped through that support at 1220. And we did not hit a bottom until we were in the 850 range. Okay, so that's a very big bearish move. A very, very big. It's about 40% or so if I did that math quickly off the top of my head. Now, that took us into the fall. And then ultimately we didn't bottom until March of the next year. I just want to also draw your attention to the timeline of this. That occurred at the end of August 26th. Right there, that was August 26th, 2008. I mean, I can't believe how close these timelines are. But this piece of the bear market took place in September and October of 2008. Now, why is that important? These are historically the 2 most bearish months of the year. Okay, and I say this every year, and every year for the most part, every year we get some bearishness happening, and people are like, I can't believe it, never saw it coming. Well, it's here. Okay, now a couple of differences. I want to draw these differences to you so that you don't have false expectations. The first thing that you're going to have to see is we got to break through this support. I'm back to current now. We got to break through this support that's around 3,700 on the S&P 500. That support right there. This falling 3 in terms of the location of the trend, we're a little bit earlier than we were in 2008. Okay, but September and October is coming up. I fully expect that we're going to see that bear market really kick into action. And, whether or not we're going to hit the extreme lows during this wave of the bear action or not, I don't know. I've zoomed back out now and you can see how similar the first 7 or 8 months of this bear market look to 2008. It looks like a descending channel, exactly like it looked in 2008. Now we're getting falling 3 patterns with your Stokes heading down. Look, it looks almost the same. Go back and look at it. Go dissect this yourself. You don't have to just listen to what I say. I mean, go do your own work on this. But it's obviously there. I'm going to open my lines back up now so you can see them. Next major target, 3,500, then 3,200 on the S&P 500. And then ultimately, I do believe that ultimately with the S&P, what were my numbers on that? We're going to be looking down here in the 2,200 range ultimately. So we will talk more about that as we get closer to it, but that gives you kind of a big picture update for that and kind of get you back on track. Now, are we confirmed for this? We're pretty much confirmed, okay? Monday is going to be telling. Don't be surprised if you go back to 2008, you're going to see really big candlesticks where the next day it bounced the exact amount. So don't be surprised like on Monday if we see 1,000 points to the upside, and then on Tuesday and Wednesday and Thursday you see 1,000 points to the downside. Don't be surprised. Volatility is here. Unless something changes in this, which I don't think it's going to, but unless something changes, you will see huge volatility over the next 4 to 6 weeks in the stock market, and we're going to see more of these 1,000-point days. I still am anticipating on the Dow we're going to see at least a 2,000-point day. So we'll see if I'm correct on that, but I think we're going to see a 5 to 7, maybe even a 10% single day, which would be 3,000 points. And And we haven't seen that kind of volatility since. I mean, we saw some in 2020. And then we saw it obviously in 2008 with the last financial crisis. But this is the next wave of that. And the good news in the macro of this whole thing, I believe when this 2022 crisis is done, which is going to move into 2023 and probably all the way into 2024, when this season is done, if you follow all the big macro cycles, we will probably, unless something else happens in there to jack this up, we should be on a trajectory for the next 80 years to have a bull market, approximately 80 years. That doesn't mean it'll be straight up. It means it'll still go up and down. But once this is flushed out, it's going to be, this is it. This is the end, I believe, of what we call the fourth turning here, or this cycle. So it's going to probably be pretty turbulent here for the next several weeks, possibly several months. And then, like I say, the good news is what's on the other side of that. So don't freak out about it. There's really good stuff you can do. I'm going to try to remember to put this in the description as well. My 3 bear market strategies. So it's a video on 3 strategies you can implement right now in bear markets to survive and do quite well. All right. One more thing I want to touch on briefly. I'll do a separate update for crypto, but I just want to talk very quickly about this. I do think the bottom for crypto could be here. However, the next 2 weeks is probably going to be very, very telling. Notice how we're coming back down to these support levels and we're testing it. This is going to be really interesting. This is Bitcoin. Like I say, I'll do another separate update for this, but just for those of you who are watching quickly here, our support is right around 20,000, just under 20,000. We are back to oversold, starting to maybe make that cross, but this supports the critical thing, is if it's going to hold or not. Same thing with Ethereum. Ethereum's starting to come back down. Our support on this one right now is in the 1,400 range. We got a long ways to go. Our major support is just above 1,000 on Ethereum. So I'm still pretty optimistic that we've already put the bottom in for crypto, but the next 2 or 3 weeks is going to be very, very telling to see how well or how much it follows the overall market. I'm just realizing I didn't share my screen. Here's the Ethereum picture. Did I share my screen? I don't even know if I shared my screen. I'm looking at the screen. I don't think I shared it. Here's the Ethereum picture here. So our support here is right around 1,400, kind of a support zone in there. And then our ultimate support's down here just around 1,000. And then coming back to Bitcoin really quickly here, that support's here at 20,000. So like I said, I'm going to do a separate crypto update, and I'm not sure how long that's going to go. But I'm going to do a separate update and try to get into some more details and look at a couple of other cryptocurrencies as well, because there's a lot going on there. And I do think that the bottom for crypto is coming up very soon. Listen, if you've not gotten subscribed to this channel, you need to get yourself subscribed to it. If you're watching this on Facebook or somewhere else, then get yourself subscribed to wherever it is that you're watching so you can get all these updates. What's really great for you is if you would go over to my website at trademaestro.com. And since I don't have a different thing, I'll just put this one back up. Go to trademaestro.com, and somewhere on there, sign up for something. You could do the 21-day pick winning stocks challenge. That would be really helpful for you. It's really cheap. It's only $100, and that'll get you on my mailing list. Or you could actually become a member if you want to, and that would be great for you as well. But if you don't want to spend any money, that's great. Right there on the homepage at trademaestro.com, there is a place to sign up for my 7 trading secrets. Get yourself signed up so that you can be on my mailing list, and I can keep you informed every time I send some of these updates out. At the very least, get yourself subscribed to the channel here so that you can make sure you see all of the videos as they come out and all the little tips that I send out and different trading techniques and whatnot. Okay. Thanks for watching. I hope this has been helpful for you. I hope you guys have a wonderful weekend. Don't despair. I realize somebody sent me a message today that they lost over $100,000 in their retirement account. And I said, look, I'm sorry, but you just got to switch your strategies up. You just have to recognize we're in a bear market. When you're in a bear market, what you don't do is the same thing you do in a bull market. If you do the same thing in a bull market, in a bear market that you do in a bull market, then you get really bad results. So you just got to shift that a little bit. So check out the 3 bear market strategies video, and like I say, go over to trademaestro.com, check out all the resources, and let me help you, because it doesn't have to be scary. There's a lot of opportunities, even right now in the middle of a big bear market. All right. You guys have a great weekend. Have a great Monday, and I'll talk to you guys soon. Until then, happy trading. Goodbye.